What's up, guys? So in this video I wanted to do some chart analysis with you and basically look at the things I look at when doing analysis on the weekends. There were a lot of requests for this, so let's get started right away. Now, I always do my chart analysis during the weekends. That's the time when the markets are closed. So I start with reviewing the past week, and then I dive into the charts and analyze the markets. Now, if you have been following me for a while, you know my trading is mostly mechanical, and I'm not going over my mechanical trading setup in this video because I don't want to basically give my edge away for free. However, I do add some discretion in order to improve performance. And in this video, I basically want to highlight the areas I look at to add some discretion to improve my performance. So let's dive into the euro dollar chart right now. Now, the things I highlight is liquidity. And that's the only thing I highlight on a chart. And I start by doing that on a daily time frame. Now, I use statistics to build a bias on the daily time frame. I'm not going over them, but the point is you basically want to build a bias on the higher time frame, so a sense of direction. And then you want to look at the lower time frames to potentially enter, increase your risk reward ratio, tighten your stop losses, etc. And how you get that bias is totally up to you. I know people that use fundamentals to come up with a longer term bias, and then they trade on the lower time frames to trade into that bias. I know people that use candlesticks like myself. You can also highlight liquidity and absorption. Again, a lot of different ways to do this. The point is you want to get a bias on the higher time frame. Now, for example, this is a candlestick pattern I use on the higher time frames to form a bias. Why is this an important candlestick pattern to me? Because it took out multiple highs. This high had been broken yet. Then we got an inside day, which usually highlights liquidity on both ends of the range. This high broken, and on this day, you got a false break of all these highs and then a clean break back within the range of the inside day. I'm not going over the exact rules, but I know that the statistical chance of a down move targeting 1R and 2R are massively in your favor if you see this pattern. So if I see this pattern on the daily time frame, I have a bearish bias, and I'm going on the lower time frames to look for potential entry spots, tightening of the stop loss, and I will be targeting spots that are in line with my statistics. For example, I have the statistics of hitting 2R after this pattern happens, and it's in line with this important daily swing low, which there will most likely be a lot of liquidity. So that's how I trade. Now, if we zoom into the hourly time frame on this particular day, and I know this is hindsight analysis, but I just want to show you a bit of the process I go to. So there we go. This high got taken out on this particular day. I think it was over here. It also took out this high, and it took out this high. So if there was any liquidity above, which there most likely was, then the liquidity has been absorbed for a strong move to the downside. Now the day closes, so the bias basically establishes as the day closes, and the day closes at, let me check, this candle area. Now, the way I used to trade these in the past is I would have this pattern just like we have here, and I would wait for a break, retest of this area, enter here, stop would go anywhere on this area, and then move to the downside. The way I enter it right now, the way I trade into these biases usually is I enter on the close, and I place my stop based on the hourly time frame. Now in this case, I couldn't get a tighter stop. But there are multiple ways you can trade such biases. So as soon as you establish a daily bias, you can then look for example, this area, you got multiple touches. This touch, as soon as it breaks, you can sell the retest. As you can see, you got to squeeze a bit, but the stop loss placement, etc., is all up to you. And then you would target this area. Why? Because it's in line in this case, it's in line with my statistics of 2R, and you can expect liquidity to be below this low. People that went long usually have the stop losses below. People that want to go short usually sell a breakout. That's also why you got this reaction here. Liquidity below this low, people will be selling, and you get a move to the upside. So step one is always to get a bias. Step two is to zoom in and to get a better entry. How you get it is totally up to you. Again, you can enter here, you can enter at a breakout, you can enter at a retest, but establish a bias so you know in which direction you're going to trade. This bias is based on liquidity and price action. Establish a target, which is in line with your bias and in line with market structure, which is here. And then how you enter and place your stop is up to you. You do want to test different ways of placing your stops and targets to potentially improve performance. So that's how I form a bias. But also, let's say you start with an empty chart and you want to mark out the most important spots. Now, in my mind, it's this area. It used to be this area. It's this area, and it's this area. But that's a fucked up line. Hold on. Yeah, that's better. So these areas are, to me, the most important ones right now, if I look at the daily time frame, for liquidity purposes. So these are all important swing points. This swing point created this move to the downside. This swing point created this move to the downside. This swing point created a strong up move and started this uptrend. And you want to see how price behaves once these swing points gets broken. So first of all, this one gets broken, strong close above, break of structure, and that's a very bearish sign. So you could use this as a bearish bias. Liquidity has been absorbed above this area, strong close below, break of structure. All right, you have a bearish bias. Where would your first target be? In my mind, it would be this target, because this is a decent swing point on the daily time frame. And then again, you go to the hourly time frame and you zoom in. So let's do that. Let's highlight the target area. There you go. You zoom into the lower time frames. So that's the target. And then this is the particular day of the price action happening. And then again, different ways to enter. Maybe you wait for structure to break and enter on this retest. Again, you got squeezed a bit, but the target of this area, it did get hit. So it all depends on how you enter it. And that's totally up to you, but you definitely want to form some kind of bias. You can also be a bit more conservative and really wait for a big move to the origin. That's what a lot of people do these days. They don't wait for a break of structure, but they wait for retracement back to the origin of the move, which is around this area. And then they would get a very tight stop and target a massive target. And sometimes it works, sometimes it doesn't. You get a low win rate with these, but again, it's up to you. So if I take a look at the euro dollar right now, let's delete this line. To me, this is an important area. And since we have broken the high of this range and rejected, this becomes the next point of vulnerability. This will be the next target. I don't have a trade on right now, but if I was bearish, this would be the target. And I still have a bearish bias for the euro dollar. I still have a bullish bias short term for the dollar. So if I could get a setup over here, potentially a fake out of this high, and I get my price pattern and the statistics line up, this would be logical target because this is where liquidity is. And the next point would be this. Now, I don't trade towards that. I usually target the first area of liquidity, look for confluence there, and I use my statistics. And that's also what I use for my mechanical trading. So let's say my mechanical setup happened over here at this swing point, then I know the chances of winning increase by around 10%, which is quite decent. And then in that case, I allocate more risk to the setup to increase my performance over time. So yeah, that's what I wanted to talk about on this chart. Let's do another one so that you quickly grasp the idea of forming a bias on the higher time frame. And again, you can also do this on the weekly time frames. It's up to you how you do it. So yeah, let's start in this case with a weekly time frame because I had it long a few weeks ago on the USD CAD. And why did I have it long? This is an important swing point to the market. It created a very aggressive move to the upside and basically is the origin of this entire move to the upside. So what do I do when I do my pre-market analysis? I highlight this area. Now, look what happens. Price breaks the area and then ranges and closes above. Gives me a bullish bias. Then I go to the daily time frame. I wait for my statistics to line up from the back testing. I also see we have a clear accumulation range happening. So this is your selling climax and this is your spring. Another reason to be bullish. So you can also use accumulation and distribution to form a bias. So for example, this was redistribution over here. If you see that, you know you're going to be bearish for the coming days and find an entry on the lower time frames. In this case, I got a bullish bias. I entered over here. So break and retest of this area structure. And I targeted this high. Why? Because this is where liquidity is. Did I close my bias too early? Yes, I did. But this is the general frame of thought. So again, daily bias, analyzing where liquidity is, looking at how liquidity is being absorbed. For example, below this low, it's a very strong rejection, gives me a bullish bias. Then I go to the lower time frames again. And then you look for an entry into the bias. And in my case, so the bias formed here, the rejection, clear level, breakout, retest, stop placement was, I believe it was here, and I would target this high. So that's a decent risk reward ratio. I got my weekly bias in line, daily accumulation, daily liquidity absorption, breakout of structure, entering and targeting a logical area of liquidity. Now, I hope you guys learned a lot from this video. And you know now what you can do with your own trading and basically build a trading plan around a daily bias or a weekly bias, and then go to the lower time frames to target these areas. I do want to quickly show you something new on my website. So for you guys that don't know me very well, I do offer coaching for my clients in terms of Forex, but also for long-term investing. Think about stocks, funds, etc., bonds, all these kind of things. And I basically talk to you one-on-one and build a long-term investment plan with you so you can independently invest and you don't need a bank or anything. But I also offer Forex coaching. Now, what's new is a free call. Basically, I just want to help people. I'm not here to get you guys money, to sell as much stuff as I can. That's not what I do. So that's why I made the free call option. And you can basically just schedule a free call and we can talk, see if I can help you the right way. If that's not the case, I just will tell you that I'm not the right fit for you and I'm not going to take your money just because I want a sale. So if you are interested in my services, but you're not sure if it's something for you, just go to my website, book a free call, and we will get to talk about your trading, see what I can offer you, see in which areas you need help, and then we can figure something out. So thank you guys for watching, and I speak to you guys in the next video.